Yeah, good day, everyone. So, welcome to the section. Not to waste time, as I like to push you to the point. Today, we'll be talking about trends and how to identify trend. So, in the first place, what is trend? Trends. Trend is your friend. People used to say, right? That. So, trend is actually your friend. Trend allow you to identify the market direction, the overall market direction, where market is heading to, the next decision market is going to make, and so on. So with trade, you'll be able to make the right decision in trading, and you'll be able to identify view market movement and direction. So people use a lot of tools, right? So how do we identify trends now? So the first thing is that tools that you'll be using to identify trends are uh, indicators and lines, right? So some people use indicator like moving average and so on. Like come here. So people use like moving average. Okay, let's use simple moving average. So it has settings that you can see that it helps you to know to identify trend and to determine to determine or to decide on markets movement, right? So we have that. So another thing to use to determining market movement is trend line. So we have this line, we call it trend line. Though this trend line can still give you a very straight line, but at the same time, you drawing the trend line will help you to identify what trend line is. In fact, that's a strategy that I used before that is built mainly on usage of like trend line. You only use trend line to identify where you enter the market and how you enter the market after like two touches at least. Then in next touches you enter your trade and so on like that. So I've used that strat and it works very, very well. But the problem that was that it exposed you to a lot of risks, right? So before I switch to a new strategy, I just make sure that at least I perfect that strategy first before I move my old strategy into it. So that's it. Then with trend line, you'll be able to tell, oh, this market is uptrend, this market is downtrend. So markets have in trend. We have something we call in trend. So what is in trend? For example, now um this market, if I have to say, like, this market generally is uptrend, like uptrend, right? It's going up, everything is uptrend. But you have this. Okay, let's do this. Then you have this is the market movement, all right? Then you have something we call in trend. This is the in trend. This one coming down. It's a trend inside the overall trend. So I will still give us a very relatable example. So that is it. These are the in trends. Then the in trends form the trend. That's how it works. So all this and this, they are in trends. So these are in trend, and this is how they form the overall market direction, right? So that is it. Now, having idea about how trade works and so on, this is like daily time frame, right? So let's go to like 4 hour time frame. 4 hour time frame, we can have a better view of the market, and we'll be able to decide on our trend easily. But most of the time, in 4 hour time frame, like daily time frame, weekly time frame, and so on, you'll be able to have idea of overall market direction. Even for our 4 hour time frame, yeah, my strategy, I use 4 hour time frame to mark my overall market direction. That's what I used to trade. At the same time, it makes me to risk in a very good manner, and at the same time, giving me a very good return. Now, so in 4 hour time frame, we can see here that market is downtrend. Yeah, coming down from here. These are the come here downtrend when accumulated here, then trying to go what uptrend here. So the other time I talked about something like in trend, right? So if why all this is like uptrend here, we have you still gonna have like something like in trend. In fact, yeah, yeah, if you go to like 5 minute time frame, you will see that we have an in trend. You can see how this. These are the in trends, inside trend, in trend. So that is it. Now, do they matter? Of course they do. When they make impulsive move, they will have to make a correctional move. Like that correctional move, they will give a series of trends. So that is it. But in trend, uptrend, correctional move, what do you need to do as a trader? So what you need to do as a trader is, yeah, you have to know your trend first. So when you're trying to take a particular trade now, this is first thing you have to do is to identify your trend. identify a trend. So you can see in 4 hour time frame like this, I'll say, oh, my trend is uptrend. Yeah. And how do you map how do you map your trend out? So, for example, you make use if market is in uptrend, you make use of the low. If market is in the downtrend, you make use of the high. So these are your lows, 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 lows. Anything that has to do from below like this, they are lows, lows. Like everything here, these are lows. Anything that has to do with highs, basically high. This is your high. So these are your highs here. These are your highs. So that's it. Now, how do you map your trend? So I make use of trend line to do. If you are working on trading view, like they're using trading view, you use shift. You click on shift to have a straight line, and you once you press that shift, you'll be able to have a very straight line. Then you move your lines. So that's it. So here is my low. So if market should come to this low and break this particular low now, and break this particular low, then market, I was like, yeah, markets, maybe market's about to change trend, yeah, something like that. Same thing that this is low, right? Because market is uptrend now. But here, this is where market, you can see even from a high, you can see that, yeah, this is coming down, coming down, coming down, coming down, coming down. And here it starts to, you know, ask, is it coming down back into this place? Yeah, you don't know, but it may come back, even break this line and go down low. Yeah. So, but what we have to do is that you just have to wait, and there are a lot of criteria we have to put in place for us to make the decision whether to buy or sell or to make a trading decision. But overall, this is all about trend identification, right? So let's go to a solid time frame, like a very high, yeah, something like this. Let me try and use, yeah, something like this, so that you will be able to understand better and have a very good knowledge of this thing. Now, market is made of highs and lows, same as life, right? So now, you using your highs, you could tell that this is up, this is down. So how do you know up and down? So let me just use this particular, like let me just use this screen section like this to mark our highs and low for us. Now, when markets, you can just start from anywhere, right? Let's say from here, this is a low, a tangible low. This is a high. Let's have something like in this high, right? This is a high. Then this is a low. If you want to copy something like that, you click on Control and click. So this is a high. This is a low rather. This is a high. When now, what you do is what you do is this. This is a high. This is a low. So you ask yourself that, fine, if this is my high and this is my low, how do I know the next? So the next high and the next low. When your low line got broken by the body of the candle itself breaks, right? That means you must have a new high. This is a new high. This is the this is the candle that breaks. So which of the high is closer to the one that breaks? This is the one that's closer. You will not take this as a high. Now, for now, you don't take this as a high. So you look for something tangible, something you can see, something that's yeah obvious. So yeah, okay, don't let us shift. Let's copy. Let's copy. So yeah, you can use the either of the green or the red candle. High. The wick. So and this is what we call the wick. You can see all this thin line above it. So that's the wick. So you can always place your high at the low. See, this is the fundamental of FX trend. The moment you don't understand this, you are not making money. That's it. The moment you don't understand this, there is no way for you to make money in forex market. Just forget about making money if you don't have understanding of what trend is. So let's proceed. Now, here, okay, let's have a new low. This is the low. You can see that yeah, this high has you can see that there are a lot of like something like accumulation, something that's trying to show that something's about to change. The momentum also reduces, like you can see big candles, solid big candles. And here we have tiny, 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 and wicks rejections. So you move it here. This is the one, use the red. So let's try to use it. Okay. So this red. Now, when this red to you can see this green try to break it, but not the wicks only break. We don't count wick. We don't count any wick at all. This is another wick. But this right here is body of the candle. Then you ask yourself which body of the candle breaks, which of the body of the candle breaks this low. This is the eye. This is the body of the candle that breaks. So where is the eye that's closer? This is the eye that's closer. So you take this and you extend it, right? So the moment you have, then you try to identify a new low. This is a new low here, all right? So then you extend it. Then we have body of candle that breaks. Where's the eye that's closer that breaks the eye? This is the eye. Ordinarily, if I'm trading, like personally, I'll take this as my high. But let's just say that beginners, like you don't know how to identify trend, then you take this high this week as the high. Then you have this body of the candle that breaks. This is the high. Then where is the low? This is the low. This is where we have rejections and accumulation. So let's do that now. So this is the low. If you don't want to use this low and fly, I don't understand this. I don't want to. You want to use this. It's fine. So let's even use this so that people will be like, yeah, I don't understand it. Let's use this. So because I've dealt with it, in fact, with a lot of people before, and they tell me I've dealt with them before, and they will tell me, I don't understand. I don't do this. If you want to mark this as a high, you can see now that you use this one, make this one to be like, obvious, this is a high. So, but maybe we should do the two because it's very clear. It's obvious that it's high. So this is high. Let's try and take this to this place, the back. So this is it. Let's use this green. Yeah. So this is the high. Yeah. So now when we have a high here, and now we can see that our eye is now broken, right? If I have to treat further, I would say this is like a low. Yeah, I can mark this as my low, or let's mark this as our low because after this one, you can have a lot of. But let's assume that generally this is the low, right? Now let's extend this low. So now markets now break the high. You can see that so far markets did not break all our highs. Body of the candle did not break all our highs. You can see. But now, body of the candle breaks. That means the trend is about to change. Not that the trend has changed. Why? Because we still have what we call the last man standing or the last line of defense. This is the last line of defense. When this one got broken, you ask yourself this question every time. Where is the low that's this is the candle? Where is the latest low? Or which of these lows here is closer to the candle? Is this one that's closer? We have this low, we have this low, we have three lows here. But which one is closer to the candle? This is the one closer. So we take this low as our new low and we have this as our new high. So we are assuming that markets has changed from what? From downtrend to uptrend. But this low here must not be broken. If it's broken, then we have a new that means our sell journey continue, our downtrend continue. This is downtrend, this is uptrend. I hope you all know that. So continues like that. So that is it. Let's have something here. So okay, let's copy. This is the low. So it didn't break. Huh? It didn't break. And this is our new high. This one breaks it. So we call this line break of structure line. Is this one that break? Sorry. Some people could call it break of character, change of character, right? So change of character, change of trend, any other name you want to give it, right? So then we have this new high here. Now we are assuming the market has changed to uptrend because before market didn't break all our highs because we are going low. That's why I told you that all this line you are having here. The other time I was explaining how to identify this thing, like I was telling you that you be using the highs, automatically breaks the high, just like more advanced explanation. But the lows is just for beginners to be able to identify do they have a new high. I will still simplify it in the range. So now after something like this in trend identification, we extend the line and we have a range. This is what we call a range. When market is moving like this, range, some people will call it shaggy, some people will call it indecision, some people will call it consolidation, some people will call it range. Any name, still the same thing. So we have a range here. Market's going upside, indecision, market doesn't know where to go. All right. But with all the indecision, which we know that we are about to change to that. So some people will say we have different phases of markets. Yeah, which is actually true. We have the distribution stage, accumulation stage. Um, we have the what do we call it? Uh, in a declining stage and so on. Different terminologies, right? But we have the downtrend, we have the consolidation or distribution, we have the what the uptrend. Like yeah. So we have the that's just it. Different terminologies and different concept of trading. The overall understanding of the market, the overall understanding of the trend is what matters most. It's not just about cramming terminologies, but you being able to interpret what you know and turn it into a valuable benefit for you. That is the end goal is to make money. So your ability to trade on your own, your ability for you to identify trends, and your ability for you to make good decision on time is what we need. Now, after the range here, we have a break here, and which of the low is closer? This is a low. But for beginner, they may not get it. But as time goes on, we will be able to, advance more. And the more you practice this thing, the more you know it. If you don't put things at work, you will not understand this. So let's have this thing here. So this is the low here. Now this is the low for beginners. So um this is the high. Then let's have something like this. This is the high that breaks it. So before we did not know whether we are going to have something like this here. We just have our lines. You understand? So we have our lines here, and that's it. So we have a new low here. So with this low, we have a break here, right? So which low breaks the low? This is the low that breaks it. So we have something like this. This is the low that breaks it. So we extend, and you can see that it's just the wick that breaks. And when wick breaks a particular line, it's what it doesn't count. It doesn't count. You understand? So that's it. It doesn't. Except the real body of the candle comes in here to come and close uh below the line. That is when it matters. So let's have this thing here again. Let's extend this line. Yeah. So here to you can see that before the market direction here is like streamlining. Here like this is like inclining, right? So that is it. Declining, consolidating, shagging, indecision here, and that is just it. So that's just the overall market direction. This is the low, this is the high. Let's be fast with it. So this is the high. So this is the low. That's close to the high. So we have a new low, right? So then we have a high again. All right. Then we have a low, which this is the body of the candle. This is the high, right? Which of the low is closer? This is the low that's closer. So we have a new low. This is our low, this is our high. Then it's got broken. Then we have a low here. We have a high here. As tiny as that place is here, it's it's a high like that. So as tiny as it is, it's a high. So let's have this. This is a high and this is a low. All right. So this one that got broken, or probably if you don't identify, if you can't understand this, like overall, let's use this place so that we're not gonna be people. Let's use this as a high. So This is our high. So that means that's the other time I was saying that if market is in uptrend, you only need the low. All this is just to explain, but we don't need them actually in the real sense. You don't need them. You understand? So you don't. Now, this is market direction. What do we do? You are able to identify that market is now going up. Now, why do people say that you need to buy low and sell high? Buy low and sell high. You buy something, right? At a lower price. That's what we people like to do. That's what we love to do. That's what everyone loves to do. You buy something at a lower price. And you want to sell something, you sell what at a higher price. That's just the concept. I just have that at the back of my brain. I buy something at a lower price. So every low, this is where you buy. If market is in uptrend, you buy, you keep on buying. Or buying means that you are expecting market to go up. If you understand the concept I explained in the introduction. So buying is like you buy at every low. You anytime you want to buy, you buy here, you buy here, you buy here. But how are you going to know? For example, now, if I have to do my analysis, this is the low, I buy in the low. It doesn't mean the market will come all the way from here to this particular place. Okay, let's use. I don't want to clear everything, but let's do that. I want to retain one or two things before because I want to explain something. Now, this is what we have now. If you like to use this one, if you like to use this, you now ask you, what do I do with this information I have? That's the next question. What do I do with this information? What you have to do with this information is that you need to study and wait for market at least any range. This is a range. We call this one a range. From here to here is a range. So from here, that's why we use discount and premium, right? From here to here, half of it. If market is below the half or market has touched the half, then you can do anything. For example, I use Fibonacci for that. Let's use sorry, let's use Fibonacci for that. I can see, yeah, that's just my own rule, right? So fit this Fibonacci, use this, you close all. I don't even need to waste time on this. Yeah, so discount and premium. This is it. This is my own discount and premium. So let me clear this high and the low for now. So let me just show you the settings here. Discount and premium settings here. This is it. 0.5 and 1. Those are the one I use. Like just to mark down. Two. But sometimes it's not necessary. If you are in my class, like you will know that sometimes you make some trading decision that you don't even have to use discount and premium, like and you can still buy. But for now, beginner focus or for beginner apps, let's. So this is what I'm trying to say. So this from here to here is discount. This is where you buy, and this is from here to here is premium, right? So like you buy something at discount price, and you sell at premium price. It's just the same thing. You buy from here. So if it's like because we are uptrend, so from here, from this line below, this is the kind of range from here to here. This range is where we look for a bar. It's in between this range that we look for our buying options. That's where we look for our buying options. So what in between here, okay, let's try and apply this to another thing else for better understanding. So yeah, these are down. You can see. So it's not that we just make that decision. There's another my own particular strategy actually. I don't want anyone to be confused with that. I don't even use like I don't even have to draw Fibonacci levels to understand where do I enter when I do not enter. This Fibonacci that I put in place now is not doesn't even apply everywhere. There are some trades that you will see that they will not reach, but most in most cases it will reach. Let's have something like this. Maybe between here. Yeah, but if you have overall here, it will do. But here, it didn't. But at the same time, using this level, we save you a lot of money. Yeah, it save you a lot of money and it helps you to make decision. But when market gets here now, let me explain how we execute trades. Right. So let's say this is your high. And this is your low. Now, this is daily time frame. I explained something about in trend. There will be some in trends too. You can see that in 4 hours, there are trends. These are in trends. This is like a low before, then it got broken, market sell, and now this is like a high before, got broken, and market change to what uptrend. That's what we call a trend. So we have in trend. Even when we go to like 1 hour time frame, you now see different. You can see these are what we call in trend. In the overall trend, there are still inside trends. That is just simply like that's just the simple meaning on that. So we have to wait for inside trend to change. When interest like inside trade like this, interests are like this. You don't trade, you don't open trade, you don't do anything. The interest is coming down. You don't trade. But when it's now change up, yeah, then you start looking for like a buy opportunity to happen to your trades. So like here now we have to look for opportunities like to trade this. Yeah, we can start looking for opportunities now to buy. And before we buy here, we still have to go to like 15 minutes. The little space here, okay, then you can look for like entry probably around here, provided that there are not some reasons for market to come down yet. So there are several reasons which can make markets come down again. So that will be in advanced classes. For now, let's take this step by step and identify things and having our confirmation. So we have something we call confirmation. Confirmation is just like uh putting in place these reasons, giving market different reasons to either buy or to sell. You give market different reasons to buy to sell. So that's what we call confirmation. So for now, this is where we just stop today, and next time we'll be talking about some concepts that will assist us in our trend, in our in trends, in our overall trends, in making decisions and tools that are necessary to to use to trade. So don't forget how to identify your change of trend when markets change direction from uptrend to uptrend by breaking the high of previous trend and fail to break the previous low. Then the same thing, market change from uptrend to downtrend where markets break the previous low and fail to break the recent high. So that's it. So thank you. Like for example, this place now, this is a low here. Market what breaks this low, then this is the high, but it didn't break this high. So it's a failed. That is just it, and there are reasons behind this, and so on. So thank you all for being here. So next time we talk more on how to look for one or two tools or how to make some decision within this particular range and what we do next in this particular range and what to look at for in this particular range. A lot of things to put in place to enable us to make a very good decision. Thank you, everyone. Do enjoy the rest of your day.